For most people who spent their lives working, saving, and planning responsibly, retirement was supposed to be the reward. You did not expect luxury. You expected stability, predictability, the ability to live without fear that one unexpected expense could undo decades of discipline. And yet today, more Americans approaching retirement feel anxiety instead of relief. Not because they failed, but because inflation quietly dismantled the foundation of their plans. Inflation is not just a rise in prices. For retirees and those preparing to retire, inflation is the slow destruction of certainty. It undermines projections, erodes purchasing power, and turns carefully built plans into moving targets. What once felt sufficient suddenly feels fragile. What once felt conservative suddenly feels risky. If you are over 55, you likely built your retirement plan around assumptions that once made sense. You calculated expenses based on stable prices. You trusted that savings would hold value. You believed that fixed income would provide security. And for a long time, those assumptions worked. Inflation was modest. Interest rates rewarded savers, and costs rose slowly enough to manage. That world no longer exists. The first way inflation destroys retirement plans is by eroding purchasing power year after year. Even moderate inflation compounds over time. A retirement budget that works today may fail completely in 10 or 15 years. What feels affordable at 65 can become restrictive at 75 and suffocating at 85. Inflation doesn't announce itself. It simply reduces what your money can buy, quietly, relentlessly. Many retirees rely on fixed or semi-fixed income streams. Pensions, annuities, bonds, and even Social Security are often assumed to provide stability. But stability in nominal dollars is not stability in real life. If income rises slower than expenses, living standards decline. Cost of living adjustments rarely reflect real inflation in healthcare, housing, insurance, and energy, the very categories retirees depend on most. Healthcare is one of the most destructive forces inflation unleashes against retirement plans. Medical costs consistently rise faster than official inflation. Insurance premiums increase, deductibles grow, out-of-pocket expenses expand. A single diagnosis can alter a retirement budget permanently. Inflation turns healthcare from a manageable line item into an existential threat. Housing follows closely behind. Property taxes rise with valuations. Maintenance costs increase, insurance premiums climb, rent adjusts upward year after year. Even homeowners without mortgages feel the pressure. Inflation does not respect ownership. It inflates the cost of staying in place. Inflation also attacks retirement through interest rates, or more precisely, through the lack of them. For years, central banks kept interest rates artificially low. This punished savers. Safe assets yielded returns below inflation. Retirees who relied on interest income were forced into a painful choice: accept slow erosion or take risks they never planned to take. This is one of inflation's cruelest tricks. It pushes conservative people into aggressive behavior. It forces retirees into stock markets, high-yield bonds, or speculative assets simply to preserve purchasing power. Risk tolerance is no longer a preference. It becomes a necessity imposed by policy. Inflation also changes withdrawal math. A portfolio that seems sufficient under normal conditions can fail under inflation stress. Sequence of returns risk becomes more dangerous when inflation is high. Early losses combined with rising costs can permanently impair a portfolio. Inflation shortens the lifespan of retirement savings without warning. For those still planning retirement, inflation destroys confidence. Long-term projections become unreliable. Financial planning turns into guesswork. Every assumption must be revisited. Retirement ages are delayed. Lifestyle expectations shrink. The promise of rest after decades of work fades. Social Security, often viewed as a backstop, provides less protection than many assume. Cost of living adjustments lag real expenses. Benefits lose purchasing power over time. And demographic pressure threatens the system's long-term sustainability. Inflation magnifies every weakness. The psychological toll is immense. Inflation turns retirees into constant calculators. Every grocery trip becomes a reminder. Every insurance bill triggers anxiety. The sense of control retirement was supposed to bring is replaced by vigilance. Inflation steals peace of mind long before it empties accounts. Younger retirees feel trapped between fear and necessity. Older retirees feel abandoned by a system that no longer rewards prudence. And those approaching retirement feel betrayed by assumptions that once felt safe. The most dangerous aspect of inflation is not its speed, it is its persistence. Short inflation shocks can be managed. Long inflation regimes reshape lives. They quietly transfer wealth from savers to borrowers, from retirees to debtors, from the disciplined to the leveraged. Inflation does not destroy retirement plans in one dramatic moment. It dismantles them slowly by invalidating the math they were built on. It turns conservative strategies into liabilities. It transforms certainty into uncertainty. This is not a failure of individuals. It is the consequence of a monetary system that prioritizes debt management, asset inflation, and short-term stability over long-term purchasing power. Retirement planning was built for a different era, one where money held value and savings were respected. Understanding inflation's role is not about fear, it is about realism. Those who recognize the threat early can adapt. Those who ignore it will slowly lose ground without understanding why. Retirement was never meant to be easy, but it was meant to be predictable. Inflation stole that predictability, and protecting what remains begins with understanding how inflation dismantles plans, quietly, patiently, and without apology.